everyone, this is Gum from FX Gum. Welcome you guys to this week's edition, week 16 of my Forex Weekly video analysis. So I hope you guys find this week's the audio quality a lot better because I spent about 200 bucks to get this new microphone just for you guys, partly from the profit that I made from last week. So I really hope that you guys enjoy this new video quality and the volume is loud enough for you guys to hear what I'm talking about. And yeah, without further ado, to this week's topic, I'll be covering more on harmonic patterns, which is something which Sneaky and I has been spending a lot of time on trying to perfect it. Partly we are influenced by Jason Stapleton, who is an expert in harmonic trading. We bought the harmonic trading volume 1 from Amazon. Yeah, we shared. So yeah, so whatever we share here is based on the book, and trade these patterns if only if you are comfortable. We like these patterns because you can always use a very small stop for a huge gain, and because we already know about Fibonacci's and confluence zone and Fibonacci extension, retracements, all this. So it made the transition for us to really learn this method in depth was pretty okay, quite manageable. And I understand that by writing on our blog it's a little bit hard to understand. So what I'm doing here this week is to try to explain this harmonic pattern using this video, and I hope you guys enjoy it. This week I'll be covering a total of 4 pairs, which is the Aussie dollar, the Euro yen, the Kiwi dollar, and the Sterling Aussie. Many of these pairs is whatever I've covered during the week, be it in Twitter, in Facebook, or in our blog itself. So I hope you guys enjoy it. Let's start our video. The very first pair that I want to talk about is Euro yen. So it has a very nice harmonic pattern around this zone here before it dropped. So I want to go step by step on what is a good harmonic pattern. So this is how it works. In a harmonic, you want to look for a pattern like like we always draw. So I'll do step by step. So firstly, nothing much has changed. Determine the trend. So week by week, if you open the grid lines, down, up, down. Okay. For example, if you're still early in the week, okay. This is the high. This is the low. Higher low, but month by month in April we have a high which has not yet been broken. So to me the trend was still down, and I'll be using looking for bearish harmonic patterns to short with the trend. Okay, so what I did was I tried to find this was down. I draw the down, high to low. Okay, you have to learn how to configure your Fibonacci. Just go and Google how to configure it. So in harmonic they believe that, okay, let me use the illustration. Okay, they believe that whenever there's a down, you'll be followed by one wave up, like we trade one wave up, down, and up again. This is the 3-wave correction, and before price plunge one more time. So what we are trying to do here is we're trying to find a pattern something like this, so that we can short somewhere here with our stops with our stops just above the previous high, which is very a tight stop, and we're trying to target, a bit confusing. Okay, we are trying to target either somewhere here, okay, or somewhere here, or somewhere here, or further lower for our profit target. So it's to us it's a very good trade because we always risk very little, and we trying to catch a huge profit. So does it always work in our favor? I believe that all these patterns work better if the time frame is a little bit slightly bigger. So I recommend minimum H1. Then if you are trying to fine tune it to get the best price ever, you can go all the way to M15. And if you are trading in the H4 setup, it will be a lot better. So let's use Euro yen as this example. So we have a down, and we expect price to do a 3-wave correction up. So it's a up, down and up one more time. So okay, let's assume that we don't know price will do this kind of bearish fall on Friday. So what we are trying to do is that we believe that retracements of between 61.8 to 76.4 is pretty good, to 78.6 I mean. So we draw it down and we hope that price will test zone around 78.6. That's the criteria of a good harmonic pattern before the price falls again. So how do we know that this zone here is somewhere that we need to watch? So instead of just finding the retracement, we have to find another one, which is the extension from this up wave here. So what we're trying to do is that we just shift the Fibonacci up and we check if there is any good Fibonacci extensions around this zone. So if you look very closely, you can see that around this green zone, which is the down move 786 retracement, we have a up 127.2 extension. So if you draw both together, we have a very nice what we call a confluence zone, which is where extension of a up move meets with a retracement of a down move. So just at this point here, so I remember where I tweeted this on a Friday, where 107 is a very good confluence zone. So in case you guys don't understand what it means, now you know. So do we just short just like this? Is there any way that we can have confirmation? Because we have another confluence zone up right here, 100% retracement with this is a 161.8 extension. Can price really come here? So the most scary part about this trading is that in one way you can think about, if you short here, this is your stops. So you have a stop of about 50 pips. You're trying to challenge, get at least maybe to double 90 pips, or you want to swing all the way down 150 pips. But for us, we rather play a little bit safer. So what we do is we like to, when you are at this is a H1 setup. So what we can do is we go to the M15 chart. Around this zone, we try to look for patterns. So what are good patterns to look at? Okay, this time I'll use an illustration one more time. When is the earliest that you can know that price is has a chance, I mean, to break, to be, I mean, to change trend? So what I like to look at is that if you take a look, you have an up, you have a down. So this is a high, low. This might be a lower high. So when price really clears below the previous low, so we can draw this candle like this. Okay, let me clear everything. I wonder if I have time to cover so many pairs. Object list, clear my Fibos. Okay, whatever. So this is what I have here: a high, low, one more high. So this is the key level to watch out. So if price really closes below this zone here, so the earliest we really have it, okay, let's not be let's be a little bit more lenient. So this is the earliest you can get in for Euro Yen trade. So we have a high low lower high reversal. Okay, high low lower high. So if price really breaks, okay, this portion here, so if price really breaks below this support, we have a trend confirmation. So most of the time, if you are trading an M15 chart, what I will personally do is to wait for a retest of this previous support, my turn to resistance, and yeah, so likely I will wait for a throwback to a previous support and a short somewhere here with my stops right above. So if you go into this example, so this will be my break. So I will have shorted somewhere around here with my stops all the way up, which is only about 50 pips, and I will just let it hang on, and this was what happened eventually. Take note that patterns like this, right, will only really just fall like a rock when it's at a strong confluence zone, which is what I mean here.